Good evening and welcome to tonight's webinar where we look at member-only content for the 18th of October. The advice provided this evening is general advice only. Investor Signals provides a broking account service which can include access to our more popular model portfolios, which is the ASX 50 and the iShares. Up on screen is the updated table of return as at the end of September, so this captures all algorithm buy and sell signals in the ASX 100 and the US S&P 100, the 5-year average returns and the financial year to date for the quarter. If you'd like to know more about our broking account service, please contact me on 1300 614 002. The services that we provide are research, which is subscription to our member-only portal, which is essentially designed for do-it-yourself investors. We have a broking account service where I place the orders for you and manage your portfolio in accordance with one or more of the models. Or we have access to a managed fund. And again, if you'd like to know more about those products, please give me a call in the office. Starting this evening with a look at the trend in US equities. We're into the first week of S&P 500 or US equities in general reporting their September quarter results. The banks, so we've seen results out of JP Morgan, Wells Fargo, and for the most part, JP Morgan's result was pretty uninspiring, and we saw the share price come off a little. Morgan Stanley's delivered a strong result. Bank of America's delivered a strong result. One of the common threads among the bank results so far has been the income from corporate advisory, so both mergers and acquisitions and new listings. But in general, the underlying banking business is delivering fairly low levels of growth, and I think to put that in context, JP Morgan's top line revenue I thought only grew at 2%, and we've seen that in our local banks. Normally we'd expect to see far better growth out of the US banks, especially from the investment banking side. But in our domestic banks, we've seen that I've commented on, where we're only seeing 1 or 2% top line revenue growth. But for the moment, S&P 500 earnings remain well supported. We've got the higher low formation. We've had the rally off that to a high there of around 4,400 in the S&P. It pulled back, created another higher low formation. So for the moment, this is the focus of the pattern, and there's still buying opportunities in the ASX that we want to look at. Looking at the stocks that have been added to the top 50 models, so click on model portfolio, come across here, click on top 50. If you're joining us for the first time and you're wanting to make sure you're following the models that are of interest, simply go through this list here and turn on or off the envelope for the models that you wish to follow. The most popular ones that clients have exposure to are the ASX 50 and the iShares ETF. Just as a reminder, we've added a few extra ETF models specific to the product provider. So with tonight, let's have a look at the stocks that are in the top 50 model and some of the recent additions, and just track, if you're looking for buying opportunities in your portfolio, which names you want to be thinking about adding in the current market. The obvious area that the market's oversold is in the resource names, and we've started to see some buying interest rebuild there, so part of tonight will be to focus on those. There's also some ETFs that I think provide a low risk way of getting diversification in the portfolio. So starting with the ASX top 50 model portfolio, you get the least number of days to the top, and we can see here that James Hardie was added on the 12th of the 10th, and the stock's up 4%. So we'll start with the stock that's been most recently added to the portfolio, and I'll move through the rest of the names. Some of these names have been in here for a substantial amount of time, so we can see ResMed's been in there for 1100 days. So part of, as I go through these, yes, we'll identify when they were originally added to the model, but as far as an actionable idea now, we'll be looking at which names have retraced enough or about to correct to a point where we're likely to see another algorithm buy signal to give you a chance to add the stock to portfolios if you don't already own it. James Hardie, just from a broad observation, it does appear that we are seeing some minor levels of slowing in the global housing data. But it's still a robust area of the global economy. In the case of James Hardie, it's corrected from 55 down to 47. We've had the algorithm buy signal there at around $46.50. I've shuffled the support up underneath that. We've added this into the top 50 model off the back of this signal, and the stock's performing quite well. As we looked at, it's already up 4%. So if you're adding that in, just think about, especially if you're sort of taking more of a trading approach, running a stop loss below the recent pivot low. Ramsay Healthcare, likewise, I've added this into the top 50 model portfolio. So this now sits in portfolios. And I think when we roll in a bit more data and have a look at what's happening here, Ramsay's really been consolidating around this sort of $60 to $68 level for almost 12 months. We did see it break higher up to 72, so we've got the beginning of this higher high, higher low formation. And I'm comfortable that the underlying fundamentals support this being a buying opportunity in Ramsay, so we've certainly added that into portfolios off that $65 level. Sonic Healthcare, under algorithm buy conditions, I've created more of a wider band here on Sonic to say that if you don't already own it, you want to be starting to think about building an accumulation position in here. And by that, what I mean is maybe have half of your position size allocated here at just under $39 and just leave another 50% of the position size if we were to see weakness back down to 36. The healthcare sector at the moment is generally under pressure as a result of rising yields and maybe slightly high PE ratios, but ultimately we're getting closer and closer to an inflection point where I think it's one of the areas that look attractive in the market at the moment, and there's a couple of ETFs as alternatives to individual stocks that I'll cover tonight. But Sonic Healthcare, definitely look at being a buyer of that between $39 and $36. We've added that into model portfolios. Likewise, Brambles, we've started adding Brambles in on this low down here. I'd be surprised to see it take out this low. For traders, you may simply want to wait for the stock to get back above that moving average, and if you are looking for a trade, you could be a buyer of it on a move back above that moving average and stick with it as long as it stays above that 10-day average. So just as a final filter, we've got the algorithm buy signal, we've got the green pivot point arrow, but if you're just waiting for that final confirmation, you could wait for it to close above that moving average. And I'll comment on that on the blog and look at that one both from an investor's perspective, where you're simply just building a position in the portfolio here, and also look at it through the lens of a trader who might be a bit more nimble and running stop losses and tracking the momentum a little bit closer. So keep an eye on the commentary around Brambles on the blog. Brambles, so in the top 50 model portfolio, as is NAB. It's performed well, but again, I struggle to see the Aussie banks going too much higher from where we are at the moment. Insurance Australia, this has been added into the model, looking for it to find support despite the legal issues the company's dealing with at the moment. Coles Group's rallied off the algorithm buy signal, so roughly around that 1650, now pushing up to 1770, but still think that Coles and Woolworths are reasonably well underwritten as far as downside risk goes, so they're still attractive yield contributors to portfolios. AZJ switched from sell conditions into buy conditions. This has been added into the model portfolio. Not much in the way of earnings growth as far as the company's guidance over the next 12 months. But whether we've hit an inflection point and we're looking at the beginning of a new uptrend developing, that's certainly what the algorithm engine's suggesting there. Rio Tinto, under algorithm buy conditions, we've seen some slightly negative news around production numbers and cost rising, especially in the Pilbara. But the correction that we've had from $140 down to $100 now, if you go out to 2023, the analysts have profit halving from where it was in 2021. So what that's telling us is the market's already pricing in the correction in iron ore that we've had from 220 down to roughly, say, just above $100, maybe $110. So anything above 110 for iron ore is going to be supportive for where the valuations are for BHP and Rio. And iron ore seems to be consolidating up more around that 120 range at the moment. But even at 120, 110, 120 an ounce and allowing for a 50% fall in profit over the next 18 months, Rio can still support a 5 to 6% dividend yield with iron ore at around that 110, 120 range. So there's some valuation support starting to come in to these large iron ore companies, providing iron ore can stay up around that 110, 120 level. So we're starting to see that buying interest pick up a little bit at the moment, which was a positive sign given also the weaker data coming through from China today, with GDP only growing at, I think it was 4.9 or 4.6%. So a little bit softer than prior trends. ANZ under algorithm buy signal, but again, not a lot in the upside there. Westpac under buy conditions. Tabcorp's performed well, so it was switched to buy conditions around that 460 up around 520, but that probably caps the upside short term. BHP, so again, if you're a trader, what you're looking at here is the stocks under buy conditions. It's got the green pivot point arrow, and your price action is above the 10-day average. Traders would stick with this trade as long as the price action maintains above that average. On a rollback underneath, you might apply a stop loss or take your profit on the trade. From an investor's standpoint, you're adding BHP back at a level that was at roughly 24 months ago. And as I mentioned, if you're comfortable with the outlook for iron ore at around that 110, 120, there's strong cash flow and valuation argument for these resources at these levels. So happy to be an investor and buy and hold these quality businesses on this current sell-off. South32 performed very well, one of the better stocks in the model portfolio. We've seen them make a acquisition of a copper mine company over in Chile that's helped to underpin this share price rally you're seeing at the moment. The market certainly views that favourably. Macquarie under buy conditions. This has clearly been the winner within the financial services space. It's been our preference over the traditional banks. And when you look at sort of where that strength in the US banking results have been, where it's been coming from, that investment banking perspective, that sort of certainly plays into Macquarie's model. So the switch from sell conditions into buy conditions there at around that 150. The stock's now pushing up towards 190. So it's getting buying interest at the moment as these banking results come through in the US and show the strength in that investment banking area. Treasury wines, the fundamentals look okay here. The executive team appears to be executing on their business strategy. We're not looking at the immediate separation of Penfolds, but as a internal restructure, if you like. They're essentially operating as two separate businesses inside Treasury at the moment. But the correction from 1260 down to this 1150, watch it closely. Maybe we get a little bit more on the downside, but somewhere between that range there, I think you're looking at a short-term trading opportunity, or even for investors to consider adding it to your portfolio. So we certainly hold Treasury in our top 50 models. CBA is under buy conditions, being one of the better performing of the major banks. Woolworths under buy conditions at around $40. I suspect this is getting pretty close to resistance, but downside risks are relatively low. Xero, we continue to like this. This is one of our preferred technology, if not the preferred technology exposure within the ASX 50 stocks. So you can see there it's been under buy conditions for a little while, so roughly at around 125, and we've had a more recent signal here. So if you don't own Xero, think about it again from an accumulation standpoint, maybe half the position size at the top of this band and add to it again if we were to see it test that lower area. And really the catalyst for it testing that lower area would be a spike in interest rates in the US and continuous selling pressure in the tech names. Goodman Group, again, if we saw a spike in interest rates, we'd see this come under pressure, so you don't want to be adding too large a position size. But these corrections, if we look at sort of the moves in Goodman Group, we know the underlying earnings are growing around 10 to almost 15%, which is fabulous for a property trust. The dividend yield is getting extremely low. I think when I last looked at it was really just just over 1%, maybe 1.2, 1.3%. So it's compressing right down, but around this $20 level, I think with 10-year bond yields at 1.6, maybe there's still an argument that it can consolidate and move sideways. Mervac Group now under buy conditions. Well, it originally switched to buy conditions back in January, February. Now we've got another buy signal here. I've created a fairly tight band there. I think this will start to see a pickup in buying interest around that 275. Just a reminder, as an alternative to all the individual stocks, if you have a look at the SLF ETF, that's continuing to perform well, and we have exposure to that. GPT, one of the better performing REITs over the course of this year. It's under algorithm buy conditions from around that 420 level, now pushing $5. Again, I'd be surprised to see too much more upside in GPT. Lend-Lease, I still like this as a longer term recovery play. Obviously faces a number of challenges short term, but we could see a multi-year recovery in that as the vaccination rates increase globally and some level of normality returns. Stockland's under buy conditions. It's doing well. It's in the top 50 model. The correction here in Cochlear from 250 down to this 210, you can start to have a think about adding that into portfolios. Again, just keep the position size appropriate there. Aristocrat Leisure, we like this. We're seeing them make a substantial acquisition for a tech company in Europe, helping to expand their sort of digital gaming presence, and rather than just being a supplier, sort of a B2C or a B2B, rather than just being a business to business supplier, they're now looking at doing more in the business to consumer space as a way of growing their sales opportunities. So the outlook for Aristocrat continues to look quite rosy. So as we see any pullbacks over the coming months and further algorithm buy signals, it might be a timely reminder to think about adding it into your portfolio if you don't already do so. We'll continue to look at the fundamentals and the earnings trends, but everything that I'm reading and looking at there looks actually quite positive. Computershare, continue to like Computershare and Link. So Computershare, if we look at the trend here, it's gone from sell conditions into buy at $12, now pushing 18, so we hold that in the top 50 model. Wesfarmers, the correction here from 65 down to 55. So if you don't own this, I think now's the time to start adding it into the portfolio. And the earnings results for F year 22 are going to be disrupted from the closures that we've had in New South Wales and Victoria. But I still remain optimistic about Wesfarmers' combination of businesses that they're holding, their e-commerce strategy, and certainly also, not that it shifts the needle too much on the profit, but their potential finalisation of the acquisition of Australian Pharmaceutical, I think API. So we'll continue to watch that, and I'll update you on the blog. But Wesfarmers, buying it on the dip, maybe you could manage the position size if you were being a little bit cautious. Maybe keep some powder dry there to add to it down at $50, but I'd probably be surprised to see it down at that low. I think around this $55 level, as the reopening of the economy occurs, we should expect that to see develop support there around that 55. Fortescue, so again, whether it's BHP, Rio, Fortescue, Mineral Resources, or the alternative being the ETF, the OZR, they're all candidates for your portfolio. If you were running a broking account with me and following the top 50 model, all of these names that I've covered are in the portfolio. So that includes Fortescue at the moment. Sydney Airports is in the model. It's one of the better performing stocks. ResMed, it's also in the model. I'd been warning about it just getting expensive up here at $40 and being patient for the pullback and the next algorithm buy signal. So I think ResMed, Sonic Healthcare, the ETFs, which is the IXJ, which is the iShares one, or the HLTH, which is the Van Eck ETF, are all good candidates. Actually, sorry, just let me check that. I think the HL, actually, let's just do this. HLTH. Yeah, that's right. It is a VanEck ETF. So the sell-off here in this, so VanEck Vector Global Health Leaders ETF. So the other one is the IXJ, but this is the VanEck version. The correction that we've had from sort of $13 getting down towards this $11 range, I think you're starting to look at that moving into an area where you could think about accumulating that. So we got up to Sydney Airport's ResMed, and then finally Northern Star. So we started to see a little bit of a rally as gold pushed up to, I think, about 1780. Maybe it's trading, I think, between that 1760, 1780 at the moment. But we started to see a little bit of buying interest in gold, but we really haven't seen those rallies continue. But the two names that we prefer still remain Northern Star and Gold Road Resources as the preference there. Just to finish this evening with a look at a couple of these ETFs that I've put on the blog. So if we actually, well, I might do this another way. Let's just go back and have a look at what's been covered on the blog over the last 7 days. And so the recent signals, so Treasury Wines, we covered that this evening. I think keep that on your watch list around that 1150 level. Wait for it to break above the moving average, and I'll keep you updated on my thoughts on that on the blog. US earnings, so really one to keep an eye on is Johnson & Johnson tomorrow night in the US. We've seen a reasonable correction lower in the biotech and big pharma names, so whether Johnson & Johnson can find support at around that $160, I'll keep an eye on that and try to update something on the blog around that. Verizon, one of the stronger players within 5G and mobile in the US, but you've seen that stock price under pressure. Interesting is Warren Buffett or Berkshire Hathaway added a large exposure to Verizon this year, but it hasn't really seemed to played through to a stronger share price yet, but the correction in Verizon down to I think $51 might be a buying opportunity, so it'll be really interesting to have a look at what that earnings result looks for. Biogen, maybe at around the $280 level, I think that's which is where it is at the moment, so I'll have a look at that earnings result. I think that looks okay. IBM, if you've been following my research, you would know that our biggest overweight position in the US market is Raytheon, which is a US military defense company. Now, they've just signed a deal with IBM on the technology side around AI, cloud services, etc. IBM, so that I'll be interested to have a look at their result as well. On Thursday, Dow, which is a big industrial company, Dow Chemical, Intel and Snap, and I've really tried to trim these results down to really the most important ones that I'm focusing on. On Friday, American Express and Honeywell. So I'll keep you updated as to how those numbers look. Rio was under buy signal. Ramsey we've covered under buy signals. On the short side, just starting to have a look at a couple of names. So Bank of Queensland in particular, but Suncorp, so I've started opening short positions in these today. Crown I still think is a recovery play, and I've put that in the high conviction portfolio. We probably won't see the full benefit of the recovery play there until maybe the early part of the new year, and maybe we get some certainty around the licensing review in New South Wales. Which would obviously be a catalyst to drive the share price higher. But from when we originally started looking at this, it traded back above the moving average. We've seen it kind of come back and retest, and it's rallied again. So we're starting to see a little bit move higher, and I think that's just a reflection on obviously the improved sentiment around some of these restrictions being lifted. The Nasdaq, so the ETF, this is the Nasdaq 100 ETF. It's one of the better performing stocks in the ETF all model portfolio. So you'll note the name there, it's ASX all ETF model. So if you actually went up here and had a look, you'll see it broken up into ASX all ETFs. So if we have a look at that, get the least number of days to the top, you can see the stocks that have been most recently added. If we wanted to see it by performance, we get the percentage gain to the top, and there it is. So the Nasdaq, as posted on the blogs, been in the portfolio for 2100 days, up 217%. And again, we're seeing that under an algorithm buy signal. So given the rally that this index has had, if you're thinking about adding this into your portfolio, you might simply add it there with a stop loss below that support line. There's the monthly returns, or the 5-year per annum average returns, which I've captured. InvoCare, look, the higher risk business, but maybe just something to have a think about. But certainly run a stop loss below that pivot low there, just above $11. The iShares S&P 500, so it's exposure to ongoing US market. Just moving back, so this is just capturing what's gone on the blog in the last 7 days. Breville, again, a little more cautious this time around than sort of the prior signals, just in case there is some slowdown in consumer spending. So again, if you're looking at trading this on the momentum, certainly buy it. It's above the moving average. Just run a stop loss below that pivot low. Appen, I just flag this one as a potential recovery as we go into a bit more of a risk on, and technology's rallying at the moment. Appen could be a stock that benefits from that. Likewise with Kogan. In both of those cases, if you're traders running positions, you probably want to think about running stop losses on those. Brambles, I covered that this evening. The Van Eyck Vector Global Healthcare, I covered that as well. Just a reminder, between sort of 11 and 11.50, you should be able to start thinking about accumulating that and building a position. The Asia 50 come off its highs today as a result of that weaker GDP data out of China, but still feel that a number of the constituents in this 50 index offer good value, especially in that technology area. Wesfarmers, we covered that. Cochlear, covered that. BHP, covered that. Domino Pizzas under buy conditions, so maybe just make a note of that, and you might want to have a look at the chart for it. Open positions, so this particular Atlas was added into the top 100 model, and in the US we've had a couple of stocks added into the model there also. Zero, we covered that. Ramsey, Cochlear, so we're starting to sort of repeat a couple of stocks that have been covered during the week. The IXJ, which is that iShares Healthcare ETF, so again I encourage you to make a note of that. So just as a reminder, you've got the IXJ, which is the iShares, or the HLTH, which is the Van Eyck one. So you can see here we've added James Hardie, we've added Ramsey to our top 50 model. On the ETF side, there was an open position on the all ETFs to add the Europe ETF, and in the US we opened a position by adding Microchip Technologies into the Nasdaq 100 portfolio. CIMIC, I continue to like that, so hopefully we'll see better earnings results out over the next 6 months, but my feeling there is that we're getting close to an inflection point, so we're sticking with the long side of that. On the signal side, we had Brambles, I've covered that. Health ETF, I've covered that. Ingham continues to deliver good results, so InvoCare, I've already drawn your attention to that. James Hardie, we've covered that. The SLF, SLR, so the SLF, just see if this links through to So the SLF, which is the Spider ASX 200 listed property fund, so if we backtrack here, it switched from sell conditions into buy conditions at around that $11 level. We had another buy signal here at $12.40, and then we've had another buy signal at around $12.60. It feels to me that we surely are getting pretty close to resistance levels in the REIT sector, but they're still going to be attractive, especially if interest rates don't surge like at times the market's worried about. To me, the downside's fairly limited here in this, so it's still attractive as an entry level around this signal level of around $12.70, and I think the resistance for it's up at around $14, and it probably has a prolonged period of maybe trading fairly sideways within that range. And there we are, back to last week's webinar. So that picks up what's been posted on the blog. I've covered the ETFs. anything else that I've missed, I'll update you on the blog. So thank you very much for listening in, and I look forward to speaking again next week. If you'd like to talk to me further about the broking account service or tuition on how to use the member area features, please give me a call on 1300